Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets of corporate filings, and today we're diving into MedwellAI's 8K filing, which seems to be doing some serious reshuffling of their preferred stock. Let's see if it's a smart move or just a fancy way to pass the buck. This filing is all about MedwellAI making changes to their Series C preferred stock. It sounds a bit technical, but it's actually a big deal for how the company is structured and how its shares work. We'll break down what these changes mean plain and simple. Before we dive too deep, if you enjoy these unfiltered looks into company financials and decisions, make sure to hit that subscribe button. And hey, we've got a fantastic community over on Discord discussing these very things, so join us there too. Link in the description below. So what's going on here? MedwellAI, a company incorporated in Nevada, is essentially merging two classes of its preferred stock, the Series C and Series D, into a single new Series C. Think of it like tidying up the house by combining two similar rooms into one bigger, more manageable space. This big change happened on August 1, 2025, as reported in this document. The main driver behind this is a share exchange agreement. Essentially, they're exchanging old shares for new ones with updated terms. This filing is a necessary step to inform everyone about these important changes to the company structure. Let's get into the nitty-gritty of what this means for the holders of the preferred stock. When a company talks about modifying a security's rights, powers, or preferences, it's crucial to understand what that entails. First, dividends. The new Series C preferred stock will get dividends that are tied directly to what the common stockholders get. This means if the common stock pays a dividend, the preferred stock gets the equivalent amount on a converted basis. It's a way to keep things aligned, but preferred stock usually has a more fixed dividend, so this is a bit more variable. Then we have the voting rights. The Series C preferred stock will vote along with the common stock once converted. But what's really important here is that the company can't make significant changes to the preferred stock without the approval of the preferred shareholders themselves. This includes things like changing their rights, issuing stock that's even higher in priority, or altering company documents in a way that harms the preferred stock. This gives the preferred shareholders a significant say in protecting their investment. In case of liquidation, which means the company is selling off its assets and closing down, the Series C preferred stockholders get their money back first. They get their stated value plus any unpaid dividends before anyone else who holds stock that's lower in priority. If there isn't enough money to pay everyone, they get a portion based on how much they were owed. This is a key feature of preferred stock, offering some protection in bad times. And for conversion, holders can choose to convert their preferred stock into common stock at any time. The conversion price is based on the common stock's closing price from the day before. This price can be adjusted based on certain conditions outlined in their official documents. This gives shareholders the flexibility to switch to common stock if they believe it will be more profitable. This part of the filing basically confirms that they've officially amended their foundational company document, specifically the Certificate of Designation for the Series C preferred stock. This amendment officially puts the merged stock class into effect, making it the new standard for these particular shares without requiring extra payment from the shareholders. Now, for the who and the what of this exchange, it seems like a significant chunk of this consolidation involved a specific stockholder, BHP Capital NY Inc. BHP Capital NY Inc. exchanged their existing Series D and Series C shares for a new bundle of 6,500 shares of the combined Series C preferred stock. This is a direct exchange, simplifying their holdings. And here's a pretty interesting financial detail. MedwellAI agreed to retire or cancel over $21 million dividends that were owed, but not yet paid to BHP Capital. This sounds like a significant debt reduction for the company tied to this stock restructuring. It's like settling a large tab as part of the deal. The filing also lists the exhibits, which are the actual documents that support all these claims. Exhibit 3.1 is the official certificate of amendment that officially changes the designation of the Series C preferred stock. And Exhibit 99.1 is the share exchange agreement itself, the contract that lay out all the terms for this whole maneuver between MedwellAI and BHP Capital. Finally, the report is signed off by Steve Rubach, the Chief Executive Officer, confirming that MedwellAI is making these changes official. The date of the signature is August 7, 2025, about a week after the actual stock changes took effect. So what does this all mean for MedwellAI? By consolidating its preferred stock classes, the company is likely aiming for greater simplicity and efficiency in its capital structure. This can make it easier to manage, issue new shares, and communicate with investors. The cancellation of $2.1 million in accrued dividends is also a significant move, potentially freeing up the company from a substantial obligation or making its balance sheet look cleaner. However, this also represents a concrete change in shareholder rights, even if it's intended to be for the better. The key will be how this new Series C structure performs. Will it truly streamline things, or does it mask underlying financial pressures that necessitated such a large dividend write-off? Without seeing their full financials, it's hard to say definitively. But the substantial dividend retirement does raise a flag. It's a good business practice to simplify, but investors should always look closely at the specifics of what was exchanged and what was given up to ensure it's a fair and beneficial transaction for all parties involved in the long run. Alright, that's our breakdown of MedwellAI's latest filing. What's your take on these stock changes and that big dividend write-off? Does it signal strength or something to be wary of? Drop your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more of these corporate investigations. And don't forget to join our Discord community for even more real-time analysis and discussion. The link is in the description. Thanks for watching, and we'll see you in the next one.